There's a lot of talk about MPC. As we've been talking about, the fact that there's talks of this new restructuring plan and having the party really take over the policy making, is that a good or bad thing for markets, you think?
I think having the personnel in place with the NPC will provide, a bit of more certainty to the market in terms of what we can expect. I think, once, we know who's in charge, they'll be able to lay out their plans for the coming few years, what the priorities are, what strategic industries they want to focus on. They'll be able to, tell us, in what ways they are able to support the economy. I think China's in a relatively good place at the moment relative to other major economies. In terms of the easing cycle. They don't have to worry about high levels of inflation, which we're seeing elsewhere. But in terms of how they can really stimulate demand, will it be policies to help home buyers make that purchase to build up confidence on that front, or perhaps more direct help for the lower income groups in terms of direct consumption. So I think that will be something good to watch that might come out of the MPC.
The opposite of everything, as you point out, right? China's the opposite of everyone else in terms of the cycle. To your point on consumption, that's one area you like as an investment thesis. Do you think you'll need to hear more support, things like direct cash vouchers, for example, or do you think the consumption recovery takes care of itself?
I think the long-term consumption story is definitely intact. If you look at, the amount of household savings that has been built up over the last few years, that's looking quite healthy. And these are genuine savings by people over the last few years who've not been able to spend. Right. There's definitely the ongoing desire to upgrade, standard of living, quality of life. But at the same time, I think, given what, the average Chinese consumer has been through in the last few years, it will take some time to build up consumer confidence back to pre-COVID levels. So, in terms of direct handouts, I'm not expecting too much, perhaps at the low income levels, and we might see a bit of that. But generally speaking, I think the ongoing trend of, upgrading, aspiration, that's a structural trend for China that we see.
We're expecting these PMI numbers. Do you think the markets have started to factor in this sort of growth, cyclical kind of recovery in these markets? Because before it was more about valuations and multiples expanding. Has that part of that China reopening rally kicked in yet, do you think?
I think when you look at, valuations, I think, we did see a very strong run-up at the beginning with the reopening, but obviously we've given up most of those gains now. So there is still the valuation angle, and, if earnings come through during this earnings season, then that will be a huge support for multiple expansion, or depending on what, the outlook is for individual companies. But cyclically, as you mentioned as well, I think we are seeing, a turning point where, manufacturing is picking back up. There is a lot of labor available in China. Youth unemployment in particular is still very high. So unlike what we saw in other economies when they first opened up, perhaps they face more, issues in terms of labor shortages. But I don't think what we'll see in China will be as much of a constraint.